So you're thinking of buying a house here in the Twin Cities. Well, you've come to the right spot. Today we're going to do a deep dive on where the housing market is right now today as of March 1st, 2023. We're going to get into it right now. Now, if you're new to the channel, my name is Steve. I'm a team lead for the Three Rivers Real Estate team based out of the Twin Cities right here in Minnesota. We produce content for people looking to move so you can have the most information you need to make the best decision when you're looking to buy a house. And like I said, today we're going to do a deep dive on where the Twin Cities real estate market is right now as of March 1st. I'm going to go into some of the reasons why we're seeing what we're seeing and what I think is going to happen going forward into the rest of the housing market. So let's hop right into my computer and get started.
All right, hopping into it right here on my computer, right InfoSparks right here for the Twin Cities region. So one of the first things we want to take a look at are what are sales prices doing? If you're looking to buy a house, it's an important thing to take a look at here. We can see our average sales price for the Twin Cities region year over year is about the same where we were February of last year versus February of this year, roughly within, $200 of each other here. So it's very interesting. Not something we've seen in a while or year over year here in Minnesota. Has traditionally still been pretty positive, even though month over month our sales price has been decreasing since June. It's still been better than where we were, the year previous. So we look at December 2022 at 412, December of last year, just under 390. So still a healthy increase in the real estate market, but this is really one of the first times that we've seen a pretty big change here, not a big change, but a zero change. So this could be, a lot of people talk about corrections and stuff like that. Average sales price needs to start coming down if that's going to happen. It's not something we've seen so far yet in the Twin Cities. It's the first time we got into zero. Now, anecdotally, stuff we're seeing within the market is not really backing a lot of this up. In the last week and a half here, we've seen a lot of multiple offers, things moving very, very quickly. But again, this is for the month of February, so we're kind of looking back in time here as we have our data to see where we're at. Now, one of the really interesting things here, if you think of price, supply and demand are kind of the two things at play here that really dictate where prices are going. When we look at supply, if we look at month of supply, it's been decreasing steadily. So if you're not familiar with the term month of supply, it's basically based off the number of listings that are on the market and the demand that is there. If no new homes were built, no new homes hit the market, we would, given our supply and our demand, we'd run out of homes in X amount of months. So for February, it would be 1.2 month worth of supply. This is a very strong seller's market in the limited inventory here, even though we see prices start to decrease here. If we go back to kind of sales price here too, if we look historically, we do typically bottom out as far as sales prices go. Pretty much in January and February is typically where we see our low tides here. So this is fairly common for it to see lower in February. But like I said, the weird part is year over year, we've traditionally still been positive. This is one of the rare times in recent history where it's been zero. Now, our month of supply, again, has still been very, very low. We've been under 5 essentially since 2014. We've been staying as very low, hovering around 1 for a very long time here in the Twin Cities. And like I said, we're down to 1.2 month of supply here. We've been steadily on our way down since September and October. We never really got into a balanced market. I know if you're looking at other parts of the country, they may have hit a balanced market. They got close to a balanced market, which is closer to 6 months worth of supply. Minnesota really hasn't. We've been a little sheltered on a lot of these different things here. One of the reasons is, interest rates are creeping up and buyer demand's coming down, but new listings are really coming down with it too. No one's really listing their home for sale. If we see here in February, we had just over 3,000 homes for sale hit the market. That's down almost 32%, 31.8% from where we were last February. Last February we had 4,500 homes for sale. So that's a significant change year over year. People just aren't looking to move as much, even though, there's people out there who are hungry, who want to buy homes. There's not a lot for them to buy. One of the reasons is just where interest rates are at. If we really deep dive this, head to like a mortgage calculator, and we just kind of do, let's say you refied your house 2 years ago. And, maybe you're an empty nester, you have a big house, you don't need it as much anymore. But if we look at what the prices are going to do, if you were to downsize, it's not very intriguing for a lot of people to move. So let's say you bought like $600,000 house, you refied last year, you owed $400,000 on it. And you locked in at a 3% interest rate, which is where it was for a lot last year. And, your monthly payments just under $1,700. Now, let's say you were to sell that house, buy something substantially smaller, something average, so $420,000. You put $200,000 worth of the equity you had into your home, so your mortgage is only $200,000, your loan amount. But your interest rate now is somewhere around 7.25. That's $1,300, $1,350. So a delta of really only $300 to downsize. Not worth it for a lot of people. You're downsizing to, decrease your maintenance, but also your expenses. So there's a lot of people sitting in, a lot of empty nesters out there, a lot of people with bigger homes who might not need those homes. But if they're not very motivated to move, there's not a good reason to, and vice versa. People who have their first homes that maybe is a starter home or a smaller home or looking to trade up, the vice versa is true. If you got $200,000 in a loan amount, your monthly payments under $100, under $1,000. Now, if you're going to trade up, buy a much bigger house, and you're at a $400,000 loan payment, we do the reverse here and lock in that 7.25 interest rate. You're 2.7 times almost tripling your payment here. It's a hard pill for a lot of people to swallow. So unless you're really outgrowing your home, or you have some extenuating things, you're going to get to a different school district or stuff, there's just really not a lot of people looking to move. The trade up people, for the most part, have a great payment. There's not a lot of inventory, so they're afraid, if they do put their house in the market, what am I going to buy? Likewise, the people on the top who should be trading down potentially, same thing. What am I going to buy? And financially, doesn't even make a whole lot of sense for me to do this. My payment's not going to change a whole lot unless I'm putting pretty much all of my equity into this thing. So like if you have a house paid off in the 6s, you want to buy something in the 3s, maybe it makes sense for you then, free up some capital. But for a lot of people, moving right now is not making a whole lot of sense. And this is what we're starting to see here in the market. It's going to be a very interesting move here in the market. If we don't start freeing up some inventory, it's going to be a very, very difficult market if you're looking to potentially purchase here, especially if you're just, a 3% down or something like that. It's going to get very competitive here as far as appraisals and stuff go if this trend continues. Now, as we're looking here today, I said interest rates have been creeping up pretty quickly over the last couple of days here, hovering right around that 7 from what I hear. The 10-year Treasury, which is a very good thing to keep an eye on as far as where mortgage rates go. Looks like it's going to close just over 4% today. Haven't really been here since last November when rates were up over 7. So expect those to kind of start creeping up here too. That's going to shift a lot of the stuff in the market here. We're not going to really know exactly how it's going to shift until we start getting some more economic data here. But we see new listings down, homes for sale trending down, month supply trending down. Odds are we're going to start seeing sales prices start to trend up. To depend on what buyer demand does, where those mortgage rates are. And like I said, they've been fairly low here fairly recently. If we take a look at what's even on the market right now, not a lot of new listings coming on. This is over the last single family over the last 7 days. I got about 1,200 new listings either coming on or in the coming soon status coming within the next 21 days. But we have 1,100 pending and 1,200 closed. Again, the inventory is starting to move in the wrong direction there. Now, we start taking a look at what we have as far as affordability. Like I said, it's if we look at what's coming soon, active with no contingencies, under 450, let's call it. Oops. Contingencies, none. Start taking a look at some stuff here. Now, this is everything: condos, townhomes, single families. You start seeing that, there's some stuff out there, but not a lot for the type of demand that's out there. And as we zoom in on some of this stuff, notice the purple stuff isn't even on the market yet. These are all coming soon listings. So if we start looking at, I want to get out into the suburbs, most of the stuff that's for sale in that price range, 450, is right in the heart of Minneapolis, kind of right in the heart of St. Paul. And we start getting out into the suburbs. If you want to start getting out there, there's really not a lot for sale. There's not a lot of options out there for you. If you think of, I want to go into, let's say, even Minnetonka, you have what would I say, 9 listings? I mean, there's just a handful of properties for sale here. So anyone looking to kind of get out into the burbs, you don't have a lot of options if you're looking under 450. You really need to be kind of in the heart of what we have here. And again, this is looking at condos and stuff too. So we got 200 some listings, 138 here. These are mostly going to be condo buildings, and that's not always suitable for everyone. 1 bed, 1 bath, 1 bed, 2 baths, under storage parking or under building parking isn't advantageous for a lot of people. If you want to start getting out into the burbs, your options are pretty small overall. And this is what we're seeing in the market right now. And we're probably going to continue to see this again until we really start seeing some changes within interest rates. Once the rates start to shift up, now people might be a little bit more motivated to make that trade up or make that trade down when it's not as hard of a pill to swallow. But right now, it's really out of a lot of people's hands. We really got to get inflation tamed. So the Fed rates are start talking about what they're looking at doing, potentially keep increasing rate hikes there from a federal level, which doesn't always one-to-one correlate mortgage rates, but it does have an influence on it. So really got to keep an eye on that to see what's going to start shaking up here. But if we don't start getting more listings, homes for sale, and this month's supply doesn't start creeping up a little bit, it's going to get very competitive out there for those who can afford to buy it and afford the purchase price on the homes there. It's going to get very, very competitive. So if you're looking to buy, make sure you have all your stuff in a row. You have, the money you need for the down payment, and make sure you're just not winding up house poor in a bad situation. Make sure you're taking the time to figure out exactly what your monthly payment's looking like, and you're comfortable in that monthly payment.
All right, so that's where things are at right now in the Twin Cities housing market. Like I said, it's really hard to know exactly where things are going to shake out. We're going to keep a really close eye on where mortgage rates are going to go and what that's going to do for buyer demand and incentivizing for people just to move. Like I said, it's really expensive to trade up right now. Financially, it doesn't make a whole lot of sense to trade down right now unless you have a whole lot of equity in your house. So unless there's something else pushing you to move, there's a whole lot of people just really kind of sitting on the sidelines right now, not putting their home on market, either because financially it just isn't making sense, or they're afraid they're not going to find something when it's time to move. So keep an eye on what rates do. There's still a lot of opportunities out there. We're still getting houses under contract every single day. Houses are still selling every single day. So it's not all doom and gloom and bleak out there, but who you work with does matter. You got to know how to structure your offer so it makes sense, and it's what people are looking for right now. Multiple times this week, we're up against 9+ offers on homes right now, and you got to know how to structure those things to get them accepted if you're looking to buy right now. So if you have questions about where you're looking to buy or how to structure your offer or anything like that, anything we can do to give you a hand in getting your offer accepted or getting you into your next home, feel free to reach out. Call, text, email, everything will be below. If you have specific questions about anything else, you can always hit us up in the comments too. And until next time, talk later.